Hey everyone, welcome and thanks for joining me this early evening, at least over here on the east part of the US. I know a bunch of you are probably in Europe, so it's probably getting kind of late for you guys, but hope everyone's staying safe with all the craziness that's going on today. And hopefully things will get back to normal soon. So what I'm going to talk to you today about are some price action patterns that are working in today's market. So I'm going to go over 5 different patterns, show you some test results and that kind of thing. So with that, let's just kind of jump into it. As part of that, I'm also going to talk about testing, because that's really what it comes down to. People can show you all sorts of setups and stuff, but unless you have the test data to back it up, it's just guesswork, because I can show you any pattern or anything, and I can show you 1 or 2 times it works and say, hey, this is the greatest thing. But to actually have data of years of data to back up something, that's what's important. And that's how you go about building trading strategies. Whether you're trading an algo, computerized rules, or you're trading discretionary where you traded using charts to trade, you've got to have a strategy to do it. You just can't buy and sell depending how you're feeling, because in the long run, that's almost never going to work. So that's kind of what I'm going to talk to you today about. And real quick, a disclaimer, don't trade with money you can't afford to lose, especially now in this time. If you realize that, hey, if I don't get some employment in the next month or so, I'm going to run out of money, don't think trading's going to solve your problems, because putting that kind of pressure on you trying to trade is not a good thing. So I'll also be showing you some results, and just remember that all results are hypothetical. So if you have questions, I don't know if I'm going to have time to get to them, but I will try to look at them if we have time. You can always send me an email, davey@kjtradingsystems.com. So for those of you who don't know me, I know a lot of you probably do. I finished in first or second place 3 years in a row in a real money futures trading contest, over 100% return every year. I've also written 4 books that have all been bestsellers on Amazon. The one right now, the one at the bottom, Entry and Exit: Confessions of a Champion Trader, has been the #1 futures book for almost the past year. So, I write about what I've traded and things that have worked and things that haven't worked, and that's kind of what I'm going to talk to you today about. I've also taught trading contest winners, and I've also taught people to create their own trading strategies. So it's more than just me being able to trade. I actually have documented success teaching others my approach. So I think that's important. But before I reveal all these patterns, don't take them and just start trading them, or don't take them and make one of the big mistakes that I'm going to talk about right now, because that's what most people will do, is they take a little nugget of an idea and then immediately go start trading it, or go off in some bizarre direction. To build a strategy takes a lot of work, 1, and 2, it's got to be the right kind of work, where you do things correctly and you don't over optimize, for example, and you don't put in a whole bunch of filters and rules, because that doesn't work. So that's mistake #1. I mean, most people just test strategies incorrectly, and I used to be in that boat, because the trading software, most trading software out there, what do you do when you look to test a strategy? You pull up a chart, you insert a strategy, and then a box pops up that says, hey, what do you want your inputs to be on your strategy? And right away, there's all kinds of optimization type, there's an optimization button and you can change ranges and you can all of a sudden test a whole bunch of things. That's not the way to do it, but that's what most people do. They take all their data that's on that chart, they take their entries, their exits, put it all together, they run it through, run thousands of iterations. I've seen people who've run millions, literally millions of iterations, and then they get this best set of parameters and this great looking equity curve, and they think, oh, hey, I just got to start trading that. This is easy, right? And they start trading, and of course it falls apart once they start trading, because an optimized trading system just about never works. So don't do that. Maybe way back when people first started doing computerized trading, maybe that worked a little bit. I don't know, but it certainly doesn't work today. But the software, that's what it kind of encourages you to do. And so watch out for that. A second big mistake is people I talk to a bunch of traders and they tend to think that price action type trading or price action patterns are something that chart traders use, because a lot of times you can see them. You can see a Doji bar, you can see other candlestick patterns, you can see where support and resistance are. And so they think, well, hey, if I'm trading on a chart, I want to use price action. And if I'm trading a computerized algo, I want to use things like moving average lengths and RSI. And that's absolutely not true. You can use both of those kind of things for either type of trading. And that's where a lot of naive traders get caught up. And I mentioned how you can get crazy optimizing. So here's an example just with Bollinger Bands and MACD or MACD, where all of a sudden I have 21 billion iterations, and this will find a great trading system and a great set of parameters. I guarantee it will. And they'll have a great looking back test, but it won't work at all going forward. But that's how a lot of people think that they can test more combinations. Can you really test Doji bars, 10 different combinations of Doji bars? Not so easily, but 10 different variations of moving average, that's easy. So watch out for that. That's a big mistake people make. So the truth is you can test both price action patterns, you can test indicators, you can run those in algos, you can run those in chart trading. But the bottom line is if you do it incorrectly, either way, you can mess up and you can lose money no matter which way you do it. So that's what you got to watch out for. And then the third big mistake I see traders making is they focus only on entries. And it makes sense. Think about when you're thinking about the market, you want certain things to happen before you commit your money to it, right? You want the moving average to be moving down and the price just bounced off a trend line and the RSI is a certain value. You put all these conditions on the market and then you say, market, I'm making you do what I want. If you do these things, then I'll buy. So that's how a lot of people think, and they think they're in control when really they're not. But it gives you that sense of control, and that's what's so appealing about entries, because people can say, hey, all these things got to line up before I enter. But that's bad. Entries are important, don't get me wrong. I'm going to be talking about patterns that are entries, obviously, today, but that's only part of the puzzle. You've got exits, position sizing, money management, psychology, diversification, along with entries. All of those things have to come together to make a full trader. So for example, you could build a really cool algo, or you could do chart trading with entries and exits and everything works right, But if you don't have the psychology to trade it, it doesn't matter. You know, you could trade the perfect system, but if mentally you can't do it, if you keep turning it on and off because, oh, hey, I got to turn it off because there's a coronavirus news conference, and so I don't know what the market's going to do, so I'll turn the strategy off. If you do things like that, you're never going to have success. So you need all these things. So I'm only talking about entries today, but realize there's a whole lot of other things that go into this. Okay, so let's just kind of jump into these price patterns. You know, you will get a recording of this, and so you can easily just copy it down. I've put the code for TradeStation. That's what I use. That's what a lot of people use. It usually wins most of the industry awards for the most popular platform. But I'll also kind of walk you through plain English a little bit. And then I'll show you some examples, some visual things. Try not to get caught up too much with the visual part, because really, when I'm building systems and when a lot of algo type traders are building, it's more about the programming, because you can always find instances on a chart that look good or look bad. And the tendency is a lot of people will try to over engineer it. Oh, I got to get rid of that trade and that kind of thing. It's a fool's game, be honest. Okay, so what this is doing, what this first price pattern is doing, it's looking at the looking for higher highs or lower lows over a certain number of bars. And it's counting how many higher highs there were in a certain time period and how many lower lows there were. And if there's more higher highs than lower lows, that's a bullish signal. You add that to a pullback, which is a momentum going against you. So if you're looking to buy, the recent prices will be coming down. Put those together, then you buy the next bar at the market. I do the exact opposite for a short sell. So it's really just a bar counter with a reverse momentum, or a pull, looking for a pullback. Pretty simple. And that's a lot of systems that I create tend to be pretty simple. Why not make something that's really complicated? Well, the simple stuff tends to work better going forward. The more rules you put on a strategy and try to impose, the more curve fitting that occurs on historical data. And that's what you got to watch out for. That's the biggest problem people run into, for sure. So I just applied this to, looks like 6-hour feeder cattle. Feeder cattle is an interesting market. And I don't know if you follow it, but in the last week, it's been going limit down and then extended limit down. And today it was limit up. It's crazy, but it also has big slippage. It's just kind of a more thinly traded market, but there are opportunities there. So I tested over 5 years, just from 2013 to 2017. This is a variation of what I call preliminary testing in the process I use. And then I'm just going to exit after a certain number of bars. I'm not trying to optimize anything. I just want to see, does this signal kind of get me in the right direction? And obviously, when you talk about the number of bar periods you look at, I'm going to have some different variations of that. And so altogether, I have 180 iterations here of different combinations of look back periods and momentum periods and exit lengths and that kind of thing. And what I'm looking for when I do this initial testing is, hey, can it make money under a wide range of circumstances? You know, you don't want it where one particular set of parameters makes money and everything else loses money, right? It's not very robust. So this doesn't tell me I have a good system. It just tells me, hey, maybe this pattern has something to it. So to kind of show you that some sample trades, you can see I've identified the higher highs. So there's a whole bunch of higher highs here, and they outnumber the lower lows over a certain period. And then the short-term momentum was down. So I went and bought here. And this particular trade, it exited shortly after, or almost at the same price. So this turned out to be not a good trade, but it's an example. And I'm not going to try to say, hey, it's going to work every time. You're looking over a lot of trades. Does it work? Not over one or two, because you'll always find one or two where it doesn't work. But the big thing was when I varied all the parameters and tried to look at things, 115 out of the 180 showed profit after slippage and commission. So I could vary things quite a bit and it was still profitable. And that gives me a good idea that, hey, there might be something to this. It doesn't say it's definitely a system to trade, but hey, maybe it's worth doing some more investigation. And for me, that would be maybe looking at some exits and then doing some walk forward testing, doing more detailed testing over a larger time period. So here's just a sample performance of this pattern. And it's not the best case. This isn't an optimized case. And you can see, you remember I said I only ran it to 2017, which is where this blue shaded area starts. And you can see it continued on into 2018 and 19. It still made money. It wasn't necessarily as steep as it was earlier on. A lot of times strategies aren't, but it still makes money, still doing decently. So, hey, it's a pretty decent pattern. Again, it's not fully developed. You got to do some other testing. I took a look at some other markets, lean hogs, for example. It looked good. For some reason, it looked good on the New Zealand dollar, which, hey, if it works, I'll consider using it. And there were 3 other markets where it looked good too. So a whole bunch of different markets, this pattern actually seems to hold up. Now, it doesn't mean it's going to hold up on every market or every time frame, but it does seem to work here. So that's pattern number 1. Pattern number 2 uses a candlestick pattern. So it's looking for a Doji bar and momentum that's going in your favor. So the price is going up, and then there's this Doji pause bar. That's a buy signal, opposite for the short signal. And you can see there's a couple parameters here. There's the look back period for the momentum. That's that P count variable. And then there's a Doji bar parameter. So you use those. And so again, I'm going to optimize over a wide range of those and see how it works. So again, this is pretty easy to understand. This is something I can explain to somebody in just like I did to you in less than a minute. I think that's an important feature of trading systems that work in the future. It's not a good feature of trading systems if your goal is to create a nice looking back test. So keep that in mind. The two don't necessarily have to be the same. So I tried this one with lean hogs, daily bars. Again, tests over 5 years, 120 iterations. So it's, a lot of this I just did the same. And here you go. You can see the momentum, this big yellow bar, arrow, the momentum's going up. There's a Doji bar, and that's like a pause bar. A lot of times people treat that as a reversal. I'm not doing that here. So I'm treating it as a buy signal, and you can see how well it worked out. That's one reason why you don't want to look at individual charts all the time, because you're always going to find times it looks bad. So here, for example, there's 1, 2, 3 losing trades in a row. And you might say, oh, this is awful, I'm throwing this away. Okay. But don't forget, you're seeing a very short snapshot in a 5-year test. So it's kind of hard to say, hey, just throw it away for those. But this does happen. But if I look at varying all the parameters and running tests over 5 years, 115 out of the 120 cases I ran all showed profit. So that means I had different look back periods and different exit lengths and all sorts of different things, and it was still profitable. And that to me is the most important thing right there. It says, hey, this might be a robust pattern. This is worth looking at more. Now it doesn't, again, it doesn't say this is a system you want to start trading. It just says, hey, maybe there's something here. So here we are again. Here's sample performance. Again, it's not the optimized case. Anybody shows you optimized cases, run. That's my advice. And that's what most people who sell things and they show equity curves, they always show the best case. And I intentionally am showing you non-best cases. There were better cases in this. I'm showing you something that's a little more realistic. And that's precisely why when you go live, you're not going to get the best case, because there's always luck. There's always a bit of luck involved in a back test. And when you take that luck out, that's what you want to know how well your system does. So I'm not showing you the best case here, but you can still see it works pretty good in true out of sample testing, which is nice to know. Okay, so again, it's not a fully developed algo. Other testing has got to be done. And initial tests on other markets look good. I did on crude oil, copper, they look good. And there were a bunch of other markets that look good. And somebody has a question, hey, why'd you do a 5-year test? I normally actually only do a 2-year test for my preliminary testing. I just did 5 years because people would always say, oh, hey, you're just cherry picking the 2 years. So I did a 5-year test. Again, it doesn't prove that this is a good system. It just says, hey, over this period, it seemed to work. Then I tack on the 2 other years. So that's over a 7-year period. But what I would do is go back and run it through a walk forward test to get all out of sample. And so that's why I would do it. So normally when I'm testing, when I run my real test, I usually run it from 2007 or 2008 until the present day. So that's what, 10, 11, 12, somewhere around that years, because you want to get a bunch of years. You don't want to run a 2-month test. I mean, I see that all the time. People say, hey, look, my system's done great for the last week. I'm going to go live. And I usually say, well, good luck with that, because that's a tough way to try to trade. All right, excuse me, price pattern number 3. I'm not going to show you this graphically. It's basically support and resistance lines based off of, some people call this a tri-average up at the top, but this is pretty standard support and resistance levels that are calculated. They're not based on drawing lines on a chart. They're just calculated. And basically, what I'm doing here is if the close is above a support level, goes above a support level, then sell short. or I'm sorry, if the close goes above a resistance level, sell short. So you're actually kind of doing a counter trend to what normally people treat support and resistance. So, and then obviously if you're thinking ahead, you're like, well, hey, why don't I just test it as a trend system? You can do that too, but I just took this as a counter trend. I chose natural gas daily bars, and again, did a lot of the same things. The one thing that's a little different here is I only did 12 runs, so I'm barely optimizing at all. So we'll see how that works out. And it doesn't take so many trades, which, you know, you balance that between, well, I didn't have so many variables I was optimizing, so maybe it's a wash, but you know, this would kind of scare me a little bit, just the low number of trades. And it still performs well, although it did have a big drawdown on this particular chart. But again, it's not an optimized case. So when you look at it, almost all the iterations, all the variations of this system show profit over a 5-year period. So again, that's kind of what I'm looking for here, is I'm trying to find something that tends to work no matter what I do. You know, the way to think about this is if you test a moving average system and you take a moving average value of 5, 10, 15, and 20, so you run 4 tests and one of them shows profit. Well, that's not really robust. But what if all 4 of those moving averages showed profit? Hey, that's pretty robust. Maybe there's something there. So that's kind of what I'm seeing here. You can see some of the drawbacks to this particular system, a huge inter-trade drawdown. So even though the numbers come out good, you might decide, ooh, hey, I don't really want to trade this because I don't like this. I mean, imagine going short here and having to live through all this, you know, before it turns profitable. And the same thing happened here. Looks like it goes against you. This trade down here seemed to go in your direction right away, but a lot of times people look for systems that have no drawdowns. And, you know, if you find such a system, send me an email and we can talk about it, because I don't think such a system exists, at least a real one. So that's pattern number 3. Again, it's not a fully developed one. Shows it looks good with some different markets. There's 8 other markets besides silver, the Nikkei index, and natural gas. So it shows it works on a lot of different markets. So that's pretty neat. Okay, price pattern number 4 is just a hanging man, simple candlestick pattern. You know, if it's a hammer, you buy. If it's a hanging man, you sell. Pretty straightforward. I didn't try to do anything here. I did it on 240-minute Japanese yen bars. Again, I just kind of picked it. You notice the theme though, I'm keeping things pretty simple. That's what I do a lot of times. Here's the performance. It's not so great since 2018, but again, you know, overall it kind of looked good, and most of the iterations are profitable. So I ran 96 here and most of them made money. So that gives me some confidence that I might have something here. And there you can see encircled in yellow is the hanging man itself. So this again shows good promise. It works on other markets, but it's a start. And that's all I'm trying to give you here, is that it's a start. It's not the end product. You know, if you were around earlier, you heard Art Collins talk. He was the first guy today, and he kind of was doing the same thing. He gave you an idea and he said, hey, take it and go and run with it and do stuff. And that's really a good way to build strategies is to take things and go and modify them. That's what I do, and I actually do it with some of our stuff. So, all right, price pattern number 5. There's a lot of code here. You might be like, what's this? Basically, we're looking for an inside bar a couple bars ago or an outside bar, and then use momentum to kind of confirm it. The whole idea here is that inside bars and outside bars both show indecision. Different type of indecision, but still, you know, when there's an outside bar, hey, the buyers tried to push it way high, and then the sellers tried to push it way low. Neither one, so that might be setting up something. And an inside bar is everybody was kind of nervous and nobody tried to push it too much, and it could be setting up for something bigger. I tested this with daily crude oil bars, and you can see it worked pretty good, and it keeps working into this untested live period. So, hey, not bad. Here's a couple examples. There's an outside bar, and then the next bar becomes your signal bar, so it enters at, it goes short there. And then here's another outside bar, a barely outside bar, and then here's another outside bar. So I don't show any inside bars here, but it's outside bars with momentum. So in this case, the momentum was down, outside bar, wait a bar, and then, hey, maybe it'll continue its downtrend. And you can kind of see it caught a couple here and missed out on one. But again, I'm looking for robustness over a lot of different iterations, and here 36 of 40 are profitable. So that's pretty nice. Whoops. Okay. So, and again, there's other markets that looks good. So you see, I kept the same theme for all 5 of these patterns. They're all pretty simple. They all work on multiple markets, but not necessarily every market. And they're good starts for something you might want to do on your own. But even so, like I said, this is just the beginning. You know, these are initial tests, and it says, hey, this is worth looking at. But when I run through and do my testing to build systems, I do a lot more testing. I look at, do I have an entry edge? I sometimes look at enhanced exits. I do walk forward testing, Monte Carlo testing, correlation testing, all sorts of testing. You want to make sure you prove that this system and this strategy is good before you go and trade it. So what it comes down to, for me at least, is entries are important, but it's the process that you use to develop systems. That's what really matters. So somebody's asking, is the live evaluation the same as live trading? It's just watching the strategy in real time. So it's not necessarily live real money trading. It's not necessarily sim trading, but if you build your strategies right, you can look and back test. You can pull up the performance report and see how it did the last week. And you know, that's the live part of it. It's after I was done developing it. So that's just part of the testing process. This is what I use, a trademarked approach. It's called a strategy factory. What we were focused on today was really kind of taking an idea, those 5 patterns, and then I did kind of a variation on this testing, but I didn't do this. I didn't do any of that other stuff today. So there's a lot more to it than just doing this beginning part. So that's what you got to keep in mind. So again, you know, does it work? Well, it's worked for me. It's worked for some trading contest winners. I've had students who've developed, last time I checked, actually now it might be up to 331 real-time successful strategies, and I've created hundreds of my own. So the process does work. It's not 100% foolproof. No process is, but it kind of skews the odds in your favor. So I use the analogy a lot of times. If you want to think about going to Vegas and playing blackjack, you know, if you just play normal blackjack, you're going to lose, right? Because the odds aren't in your favor. But if you card count and you do it right, you put the odds in your favor a little bit, and you can be a winner over the long term. Unfortunately, a lot of people card count and do it incorrectly, and they still lose. And that would be, hey, I'm going to develop a trading strategy and do it the wrong way. You know, you're not going to get any kind of edge out of it. You're just going to do things incorrectly. So, you know, can you do this on your own, you know, without following the way I do it? Yeah, I mean, you know, the way to do it is kind of what I did way back when. You develop a whole bunch of strategies because you want to get some statistics on it with a consistent process that you just repeat over and over. You watch them in these results in real time then. And then if the process isn't working, you go back and you change some things. You create more strategies. You watch it in real time, and you keep doing that till you either give up, which is what most people do, or it turns profitable. And you might say, it's crazy, I'm not going to do that. Well, that's exactly what I did years ago. I would try things, they wouldn't work. Then I'd say, oh, hey, maybe I should do this Monte Carlo simulation. And I learned about it and tried to do it and implement it and said, you know what, this seems to help. Walk forward testing, this seems to help. So you can definitely do this on your own. Just have a repeatable development process. And the key is to make sure you prove it out in real time. So just kind of summing up, I've given you 5 different entries today, and they all seem to work in today's markets. Use that as your building block to create strategy. So combine them with exits, combine them with any other things you want in them. But the key point is to have a proven development approach. I mean, without that, you're going to be in trouble. So if you want to learn more, just go to my website, KJ Trading Systems /free festival, and I'll give you a free trading system that trades the S&P, and you also get a little ebook on entries and exits, other entries and exits, not the ones I talked about today. And you can learn about kind of how I do things, and then you can just kind of mimic it and do it on your own. So it looks like we have about a minute or two. We have some questions. Jason's asking, how'd you do testing without any particular exit strategy? So what I was doing here, Jason, was just exiting after a certain number of bars, and because I just wanted to see if that alone could give me profit. So I didn't try to do anything special with the exit. So I was trying to let the entry really dictate. If the entry is good, exiting after a certain number of bars should be profitable. So that's what I was trying to do there. And take one more question. Todd has a question. What do I mean by incubation back in my process? This is a step where you basically have the strategy developed and then you watch it live. And if it performs live comparably to what it did in backtest, then you know you can trade it. There's a lot of little rules to this, but it's a great way to weed out over-optimized strategies. All right, so with that, I'll turn it back over to Dave, and I want to thank you all for attending, and I hope you enjoyed it.